Hello, everyone, and welcome to the second session of our Summer Uranium Conference, Canadian Movers and Shakers. I'm David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities. And during this session, we have NexGen Energy, ISO Energy, UX Corp, Valor Metals, and Labrador Uranium. So several companies that have Canadian assets. Each company will have 10 minutes to present, and then all speakers, once that's done, will come back for a 20-minute roundtable panel session. Viewers, feel free to ask questions either for a specific company or broader questions that we can pose to the group. Use your Q&A button at the bottom and we will get to as many questions as we can. So here we go. Up first, we have Travis McPherson. He's Senior VP of NexGen Energy. So Travis, why don't you kick it off here?
Perfect. Thanks, Dave. And thanks to Red Cloud for hosting this. It's excellent. Tim, can you see this? Yep, perfect. So yeah, look, I'll skip over what we typically talk about uranium. I'm sure everybody that's here and listening is either acutely aware or somewhat aware of the bullish fundamentals for uranium, but I won't. We've only got 10 minutes, so I'm not going to spend a lot of time on that. But needless to say, the world needs a lot more supply, and hence listening to ourselves and all these great companies on this discussion and probably the prior ones is what you should be doing. So NexGen Energy, we are developing an asset called Arrow. It's in Saskatchewan in Canada in the Athabasca Basin. It is a phenomenal asset. It's a one-of-one type deposit. It's going to be low cost, environmentally elite. So what do we mean by that? Well, lowest cost in the world, largest mine in terms of output, but from a physical footprint perspective, actually quite small. So very low environmental impact. And we've also undertaken some very unique design elements, such as full storage of 100% of the tailings back underground. So leaving no surface tailings to deal with at the end of the mine. Water recycling, there's a number of things that we've done, but effectively we made a commitment to set a new standard for the mining industry. I'm sure all these companies that are developing assets are going to do the same thing. But the industry has done a great job in the past. We need to keep moving it forward, and we're going to do our part in that with respect to environmental and social stewardship of the mine. So low cost, environmentally elite. It's long life. We'll talk about what the feasibility study represents and talks about and outlines, but that's based on an 11-year mine plan, based on the reserves that we have drilled off. The deposit's open everywhere. And we can talk about some of the exploration we did last year and what we're targeting this year. But needless to say, the Athabasca Basin as a whole is the most well-endowed uranium area on the planet, and the west where we are is growing into the next era of the Athabasca Basin's future. So that 10-11 years in the feasibility study is kind of like a phase one. We're actually permitting for a 24-year operating life, and we actually just submitted our EIS. Again, we'll talk about that in a moment. And then jurisdictionally, so these are all the characteristics that make something, in our view, a tier one type asset. And the jurisdiction is obviously, in our view, always been very important, but probably growing in importance. And so being in Saskatchewan, which is consistently ranked among the top mining jurisdictions, and definitely, in our opinion, the best uranium mining district in the world. We'll skip over that. We'll go straight to the feasibility study. So we put this feasibility study out just over a year ago. As you can see, the numbers are quite phenomenal. Again, this is based on just that first 10 years or 11 years of mining. But it outlines, at base case, spot pricing today, which is well below global incentive pricing for new production. It outlines a project on that first phase of 11 years of about $3.5 billion after-tax NPV, 52% after-tax IRR. And although it will cost us $1.3 billion to build this project, because of the technical setting and the grade profile, it actually pays that back in about 10 months. So it's It's really a freak deposit. And frankly, all the deposits in Canada are phenomenal relative to everything else in the world. Not to disparage everything else in the world. There's good projects in the rest of the world, but Canada and the Athabasca Basin is the only place you get these types of grades and tonnages. So it's a great place to be developing these. This is why we targeted Saskatchewan, frankly. We're going to generate, $1 billion in after-tax free cash flow once this is in production. And we'll talk about what we're going through now and the steps between now and then. But needless to say, when we're in production, it's going to be about $1 billion in after-tax free cash flow. That's, again, at current spot pricing, which is, again, below the price required to stabilize the market. But that will elevate us into almost a top 10 global mining company by that basis. So it really has an opportunity to not only elevate NexGen as a company, but bring Canada back up into the number one spot of uranium production. All of that too is based on a 1,300 ton per day mine, which, people look at $1.3 billion and think it's a big project. It's really not. 1,300 tons per day is very, very small. And that's important from and it's all conventional. So that's important from a execution perspective, but also from a permitting and engagement perspective. It's just quite low impact. If you just think about moving 1,300 tons per day, you're not going to create a lot of greenhouse gases doing that. You're not going to make a lot of noise doing that. You're not going to disturb the air quality a lot doing that. So all of the things that kind of the physical surface footprint at the end of 24 years of mining is like the size of a stadium and the parking lots kind of. So it's very, very low impact. This gives you a sense, again, based on that first 11 years in the feasibility study, the sensitivity to uranium price, obviously very, very sensitive to the upside to uranium prices. And you can see like your EBITDA profile starts to approach kind of a top 5 global mining company when you get into prices that are closer to incentive pricing for the industry in that $75-$80 range. We'll skip over that. This is another really important slide. This goes to what we were talking about before in terms of the technical setting. It is quite unique and really is what drives the ability to produce as much as we can produce at the cost profile that we can do it, both in terms of CapEx and operating costs and an all-in sustaining cost basis. And also why we are able to do underground tailings management, because we're in this gray rock there that you see here called crystalline basement. That's basically granite. So very, very competent, very low hydraulic conductivity. So water flow rates are very, very low. And so it's just an ideal setting. And the deposit itself, this is a cartoon, obviously, but this is Arrow here, and it's vertical in nature. It's actually a series of about 5 different shear zones all stacked next to each other and all parallel and vertical in nature. So that's also very advantageous from a extraction perspective. Again, completely conventional, both in terms of mining. Long hole stoping is the underground mining method, so very low risk, and similar from a milling perspective, very predictable, low risk process flow sheet, achieving close to 98% recovery, all while having elite environmental performance. And this is a rendering of what the mining mill will look like, which is quite incredible. If you're just looking at this is not a cartoon. This is based on engineered drawings. And this little thing you're seeing here is gonna, at 30 million pounds a year, that's gonna be 2%, call it, of the electricity on the planet is gonna come from this little mine. So it's very, very favorable. In terms of exploration, and I'm sure a lot of these other companies are going to talk a lot about this as well, but this is a very underexplored region. The Athabasca Basin as a whole, there's been parts of it that have been somewhat explored, but generally speaking, still remains very underexplored. This southwestern part of the basin, even more so than the rest of the basin probably, or parts of at least the eastern Athabasca Basin, but lots of potential. Each one of these corridors are kind of regional conductive corridors, basically cracks in the ground. The fluids can go through. Each one of these is basically equally prospective. As you can see, the Patterson corridor is the only one that's really had any exploration. All these stars are new discoveries made by NexGen. This year is a neighbor of ours called Fission Uranium. Up here is Cameco and Orano, and a small junior called Pure Point Uranium. But all the rest of these arrows right there in the middle, basically that's everywhere we've drilled. Effectively, there's just lots of uranium everywhere in this corridor. We're going to be moving over into these packages here, the Dirksen corridor package, this summer, and very, very excited to get there, because actually this corridor here is why we acquired this package of land originally, because there's a drill hole up here that hit 2 meters of 0.2% U3O8, and that indicated to us that at least this corridor was potentially uraniferous. We actually just drilled this one first because of logistics. It was closer to the highway and closer to the lake, and we're drilling in winter. So we haven't got back over here because we hit Arrow with the first drill hole back in February of 2014. So we're very, very excited to get out here and look for more arrows. As you can tell, and as I've outlined, Arrow itself is not fully defined. We don't know what it will ultimately end up being, but we do know that at a base case, we have a very well-defined feasibility study going through detailed engineering right now. That will keep growing, but we're not going to marginally grow that now. We can do that from underground much more efficiently, and we have what we need to warrant, financing, permitting, building it. But what we do want to understand better in a systematic way is we feel that there's high potential that there's more arrows sitting here. And so we want to just systematically go along and test for those. So we started regional exploration again after about a 4 or 5 year hiatus last year, and we'll be continuing this year. I won't spend much time on this, even though it's a very critical element, but what I will say is please go to our website. There's a number of videos that we've done. We just put out another video actually outlining the EIS submission earlier this week. It really gives you a great window on the very meaningful impact that the company, together with these communities, are having in the region. And it's something that everyone at the company, and I'm sure everyone on this panel, is and should be extremely proud of doing. We've already talked about the tailings management. Again, these are all covered in the videos. And so in terms of, I might just finish with this. We have $165 million in the bank, so well-financed. But this is kind of the outline of what's to come. Obviously, we just submitted the EIS. We're going to be completing front-end engineering design shortly, commencing with detailed engineering, or the back half of detailed engineering, I guess. Doing some regional exploration as well. In terms of the permitting from here, what happens is a couple of weeks from now, you'll see a public comment period start. That's up to 120-day period. And then we respond to any comments and questions that come up. The EIS becomes a formal final environmental impact statement. And then we're waiting for our approvals thereafter. So we are in the back half of, or the back, whatever, of the permitting process. This is not, I guess the key here is the submission of the EIS is by no means the start of a permitting process. It's representative of the back of the permitting process. So with that, I might just stop being conscious of time. Hopefully I haven't gone too much.